Let's shift our attention to the C-suite now to take a look at how some executives are processing the economic recovery, especially with a new administration coming to the White House come January. I want to bring in Bill Casey. He is EY America's Vice Chair, Strategy and Transactions. And Bill, I want to get to a survey that you put out among some of the top companies in terms of how they're processing this incoming administration. But I am curious right now, in the conversations that you're having across sectors, what is the sense about where we are in the economic recovery and how sustainable this is?
Yeah, well, thanks for the opportunity to present. So, I would say there is obviously a lot of great momentum that we're seeing in the market. Certainly, we're seeing that in the deal market. The level of M&A activity has picked up significantly. So, I think the fact that companies now are planning for what business is going to look like post-pandemic. And so we're seeing companies are making a lot of strategic decisions around, one, in terms of reinventing their business model. Two, they're looking at workforce management. I'd say as a result of just the change in business models during COVID, is looking at how to really digitally transform their businesses.
Yeah, one of those other strategic opportunities, I guess, out there now would be the opportunity here to make some moves ahead of whatever tax changes might be coming down the pike. What did you see on that front when you interviewed C-suite execs here on that front, into why now might be the right time to pull off some of these deals?
Yeah, look, there's no question that tax is always an important consideration with respect to M&A. And when we surveyed the C-suite, 70-80% of the respondents were clearly going to accelerate their M&A plans prior to any changes in tax policy, whether it be increase in the income tax rate, capital gains tax rates, changes in depreciation policies. So clearly, companies are watching it very closely.
One of the findings that really stood out to me, Bill, is companies looking at their supply chains, essentially looking to build up their domestic production. You point to 64% of companies looking to do that in response to anticipated policies that would incentivize onshoring. Now, the current administration and President Trump would certainly argue that that has been the focus for them, but what specifically are executives anticipating from the Biden administration, and how much of this onshoring is also driven by what we just saw play out over the last 8 months, which is to say just how complex the global supply chain is and how vulnerable they are to disruption?
Yeah, look, I think you pointed it right out. There's really two drivers here. I'd say, first of all, COVID really pointed out that companies need to de-risk their supply chain. So when you think about, for years, companies built up supply chains for just-in-time inventory. Now you're looking at scenarios just in case. And so, whether really de-risking their supply chain, not only for the next COVID, but for the next shock in their supply chain. I think that's number one. And then number two, clearly, there is the expectation that more incentives will be for companies to have more onshore capabilities. So clearly, we expect to see a lot of M&A activity, probably here in the U.S., where companies have to look at build versus buy. So we certainly expect an uptick in that activity.
Yeah, and when we talk about incentives, clearly a large chunk of the incoming Biden administration's efforts are going to be focused on sustainability. That stood out to me as well in the survey, looking at kind of larger companies saying that it would be difficult to make some of those changes, whereas some smaller companies said it would be easy to respond. Where do you think that break is coming from in maybe addressing whatever goals the Biden administration sets out beginning in 2021?
Yeah, I think, look, when you look at companies that are probably over the $5 billion revenue threshold, most of those companies are going to be global businesses that have operations throughout the globe. And the larger scale they are, probably the more complex their supply chains are. And these companies are dealing with all types of issues throughout the globe. So, implementing corporate-wide global policies can be very challenging. So that's why you see companies that are below that threshold right now are being very, very opportunistic, and they, quite frankly, have the ability to be more nimble and flexible. So I think that's probably the key driver.
No question, this incoming administration is going to be much more focused on climate and sustainability, to your point. But it does seem like we've also seen a real shift from shareholders who are demanding a little more transparency on climate risks. CDP came out with a number last year that put it at about $1 trillion in terms of the risks that it presents to the largest companies globally. How do you think executives are looking at that right now, and how much of that pressure is likely to incentivize change within the C-suite in policies that address sustainability?
Yeah, no question, no question. I mean, this is a key C-suite boardroom discussion, and the days of companies solely being valued from ROI and cash flow, that's not that that's going away, but shareholders and stakeholders more broadly are looking at environmental, sustainable governance type issues in a very different way than we've looked at it before. And there's significant value that's being given to companies with respect to whether it's their impact on the environment, sustainability, and the governance, and their ability to have strong internal controls, development of IP, protection of that IP, et cetera, has clearly become a C-suite boardroom level topic.
Yeah, we've seen a lot of companies coming out even stronger than where the current administration is in terms of getting back into and supporting returning to the Paris Climate Accord. But very interesting stuff here. Bill Casey, EY America's Vice Chair in Strategy and Transactions. Appreciate you taking the time. Be well.
Thank you.